All right, let's talk about 2025, because in the world of telecommunications, this year is a total flashpoint. You know, artificial intelligence, it's not just some buzzword anymore. It is fundamentally rewriting the rules of the game for global connectivity. So today we're going to break down a story of massive market disruption, and it all comes down to two absolute giants, Nokia and ZTE.
You know, Nokia's own report really just says it all, doesn't it? The challenge here, and this is the critical part, isn't just about building bigger pipes to handle all this new AI traffic. No, it's about creating networks that are actually AI native. Think about that. Smarter, self-optimizing systems. And that one idea? That's the huge strategic hurdle that every single major player is desperately trying to clear right now.
And that, of course, brings us to the two grandmasters sitting at this global chessboard. In one corner, you've got Nokia. They're really positioning themselves as the go-to trusted Western supplier. And in the other corner, you have ZTE, the Chinese powerhouse, leveraging its huge domestic scale but with serious global ambitions. And what's so fascinating is that they are making completely, fundamentally different moves to try and win this new AI-driven game.
Okay, so let's get into it. First up, we're looking at their strategic bets. We're going to break down the two completely different paths they're carving out to try and win the future of AI. It really boils down to this: silicon versus scale.
So, Nokia's play here is incredibly specific, and you have to see it as a high-risk, high-reward bet. When they acquired Infinera, they weren't just buying another company. No, they were buying control over the core optical silicon technology. This is a classic vertical integration play, right? They're aiming it squarely at the customers with the deepest pockets, the data centers, the cloud providers, the ones actually fueling this whole AI boom. And this isn't just a theory. We're talking about a segment that already drove 2.4 times billion euros in orders for Nokia this year.
Now let's flip the coin and look at ZTE's approach, because it's a totally different game. They're celebrating breaking 2 million units in cloud terminal sales just in their home market. But listen, this isn't really about selling devices. It's the proof in the pudding for their connection plus computing power strategy. See the difference? They are betting on breadth and massive scale. Their goal is to own the entire integrated system, not just one shiny component.
So, what's the big takeaway here? It all boils down to this fundamental split in strategy. You've got Nokia making a deep, narrow bet on a specialized, high-margin piece of technology, and then you have ZTE making a super broad, integrated bet on owning its entire domestic ecosystem. We're looking at two radically different philosophies on how you win in this new era.
Okay, but strategy is one thing. Now we have to look past all the fancy press releases. It's time to put on our forensic analyst hats. Because when you really start to dig into the balance sheets, well, you start to see some interesting signs of financial stress for both of these giants.
This dashboard really flags the key concerns for us. Let's start with Nokia. You see that $940 million in goodwill? That's from buying Infinera, a company that was, well, losing money. So what does that mean? It means if those hoped-for synergies don't show up, there's going to be huge pressure on Nokia to write that value down. It's a big risk. Now for ZTE, look at this. Net profits are down over 33%, but their R&D capitalization rate is going up. That definitely raises some questions about potential earnings management.
And this chart for ZTE, this is what really makes you pause. Okay, so capitalizing R&D, what's that? Basically, it means you take an expense, and instead of putting it on your income statement now, you move it to the balance sheet to deal with later. The effect? It makes your current profits look better than they are. So when you see this rate climbing at the exact same time profits are already falling, well, that's a classic signal, maybe even a red flag, that sophisticated investors are always going to look at very, very closely. So the takeaway here is crystal clear. Behind these big, bold strategies, you have some very real financial pressures building up. For Nokia, it's all about execution risk. Can they make that huge Infinera integration actually work? Meanwhile, for ZTE, their accounting choices really demand a much, much closer look from anyone paying attention.
All right, finally, let's talk about the playing field itself. Because we have to be honest, this is not one big, happy open market. By 2025, the tech world looks more like a patchwork of walled gardens and fiercely protected territories. In this environment, geopolitics, it's not just a factor, it's pretty much everything.
And this comparison just shows you how geopolitics is a true double-edged sword for both of them. Look at Nokia. Their brand as a trusted Western supplier is fantastic for winning over hyperscalers in the West. It helped drive a 15% jump in North American optical sales. But that very same brand becomes a liability in China, where their revenue dropped 19%.
And for ZTE, it's the reverse. Their huge domestic market acts as a stable ballast, right? It protects them from all the international headwinds and export controls that are forcing them to make, let's call them, structural adjustments everywhere else.
And all of this forces us to ask a really critical question, especially for anyone investing in this space. In a tech world that's so divided, so balkanized, which strategy is actually more resilient? Is it the Western-aligned specialist, or is it the self-reliant domestic powerhouse?
So, let's bring this all together. Look, we're not here today to pick a winner. That's not the point. Our goal is to really clearly lay out the two incredibly different paths these companies are carving out, even though they're both racing toward the exact same destination, a future that is completely powered by AI.
So you've got it right here. On one side, you have Nokia's specialist path. It's focused, it's high margin, and it's a bet on owning a single critical technology primarily for Western markets. And then on the other side, you have ZTE's path of integration. It's broad, it's scale-driven, and it's a bet on owning the entire ecosystem for its massive home market.
And that leaves us with the final, and I think most provocative question. As this AI supercycle really hits its stride, which of these strategic bets is more likely to pay off? Is it the deep, narrow focus on owning proprietary tech, or is it the broad, protected dominance of an integrated domestic scale? The answer to that question, well, that is going to define the next decade of global connectivity.
Now, if you want to dive deeper into all the data, the risks, and the strategic implications that we've just touched on, you can download our complete institutional-grade report over at HDINresearch.com. Thanks so much for joining me.